Hello, my dear students, and welcome back. I know. Exams are coming, and this depreciation chapter can seem like a big headache. But hey, your favorite tutor's here, so tension not. Seriously, don't you worry one bit. We're going to tackle this together, and I promise you, by the time we're done with this quick explainer, you'll be thinking, wow, was it really that simple? So let's jump right in. Okay, so first up, what on earth is this word depreciation? It sounds so complicated, right? But really, all it means is value kamhona. That's it. It's just a fancy word for saying that the value of something goes down. Simple. Let's take an example. Imagine your dad buys a fantastic new bike for 1 lakh rupees. It's all shiny and new. But what happens after, say, 5 years of riding it around? Is it still worth 1 lakh? No way, right? Its value has dropped. Well, that drop in value, that is depreciation. See? You already knew what it was. All right, here's the formal textbook definition. Don't let the words scare you. A fixed asset is just a big-ticket item a business owns, like a building or a huge machine. And book value is just the price they've written down in their account books. So all this definition is saying is that the value written in the book goes down slowly and steadily over time. Not so scary now, is it? Now, one really big reason for depreciation is this cool word, obsolescence. You know this better than anyone. Think about your smartphone. It's working perfectly fine, but then a new model comes out with some crazy new camera. Suddenly, doesn't your phone feel a little old? Its value drops, even though it's not broken. That's obsolescence. New technology making old things less valuable. So you might be thinking, okay, I get it, value goes down, but why do we have to calculate it? Can't businesses just ignore it? Well, the answer is a huge no, and the reason is super important. It's all about finding the asli profit, the real, true profit of the business. You see, for a business, depreciation is an expense, just like paying salaries. If they don't count this expense, it looks like they're making more profit than they actually are, which is wrong. Plus, by showing it as an expense, they can actually save some money on their taxes. And, it's the law. You just have to do it. Okay, now for the part that you're definitely going to see in your exam, the numericals. There are 2 main ways to calculate depreciation, and I want you to think of them as the 2 heroes of this chapter. You have to know them. Our first hero is the straight line method, or SLM. It's, a straight line. Super simple. The amount of depreciation is the exact same every single year. Easy peasy. Our second hero is the written down value method, or WDV. This one is more like a ski slope. The depreciation is really high in the first year, and then it gets less and less each following year. Whee! Down the slope. All right, everybody, focus up. This next bit is a 5-star, super important exam topic. Understanding the difference between these 2 heroes, SLM and WDV, is your ticket to full marks in theory questions. Let's nail this down. Let's look at this table. With SLM, you always calculate the percentage on the original price you bought it for. But with WDV, you calculate it on the new, reduced value each year. So the amount stays the same in SLM, but keeps decreasing in WDV. Now here's a key point. The income tax guys in India only accept the WDV method. Why? Because it's more realistic for things like cars and machines, which lose a lot of value right at the beginning. That's why SLM is better for things like buildings, while WDV is perfect for vehicles. And this chart makes it perfectly clear. Look at the SLM bars. They are all the same height, flat and steady. Now look at the WDV bars. See how the first bar is the tallest, and then they get shorter and shorter? That's our ski slope in action. High depreciation at the start, then it reduces. Okay, enough theory. Are you ready to get your hands dirty? The absolute best way to score full marks in this chapter is to practice a problem. So come on, let's solve one together, right now. So here's our problem. It's based on illustration 4 from your textbook. A company buys machinery for 2 lakh rupees, and they spend another 10,000 rupees to get it installed. We have to apply depreciation at 10% per year using the WDV method and prepare the account for 3 years. Let's do it. Okay, let's break it down. Step 1 is super important. You must find the total original cost. So we add the price and the installation cost. That's 2,10,000. For year 1, 10% of that is 21,000. Easy. Now the new value is 1,89,000. For year 2, and this is the key to WDV, we calculate 10% on this new value, which is 18,900. See, the amount went down? We just do the same thing again for year 3. And ta-da! Once you put all those numbers into the account format, this is what it should look like. My champions, please remember, presentation matters so much. Making your answer sheet look neat and tidy like this can really help you score those extra marks. Phew, we're almost there. Before we wrap up, let's do a super fast revision of the most important things. Think of this as your secret cheat sheet for the exam. Ready for the final power-up? All right, time for a pop quiz. Let's see who was paying attention. Here's the statement. Depreciation is a non-cash expense. Is that true or is it false? Come on, you know this. The answer is true. Yes, shabash, my dear students. You are absolutely right. It's called non-cash because even though we record it as an expense, no actual money, no cash is leaving the company's pocket. It's just an entry in the books. You guys are rock stars. So, here are your final exam mantras. 1. Depreciation is just the value of big assets going down. 2. SLM is the same amount on the original cost. 3. WDV is a reducing amount on the new book value. 4. The tax department loves WDV. And 5, and please remember this, always add installation cost to the original price. And that's a wrap on depreciation. My dear students, you are all so hardworking and brilliant. Just remember this little quote as you go into your exams. Don't stress, do your best, forget the rest. I have complete faith in you. You are going to be amazing. All the very best.